Alright, good evening everyone. This is Friday, March 28th, 2014, and this is my reassessment video number 7. And on this one, I'll be going over, let's see, Plug and Yelp. So here's the first trade. This is Plug. Got in on the 25th. It took it out, covered the next day on the 26th. And, the lesson I learned from this one is if there's conviction and conviction comes before anything. And on this one, I sort of chickened out. So, I'm still learning, and it's a process. So let me bring the chart in. All right, so here is. Let me just detach it. All right, here it is. All right, so my entry was, and these are 30 minutes. Say 5-day, 30-minute chart. So my entry was maybe somewhere around on this candle here. I was late getting in on it. I didn't, the CEO made some sort of announcement that just rocketed the stock to 848. But I got in about maybe the 650 area, and when I did, the 5.5 puts were trading at 5 by 10, nickel by a dime. So I took in 8 contracts and collected a premium of a total of 40. Now, the reason why I got scared is because, whenever I woke up, I saw this thing was down to back to 675, something like that. Somewhere in this area is whenever I sort of, panicked and sold. And, lesson from this is, first off, 5.5 is way down here. Okay. Second, of course, there's going to be profit takers and fresh shorts coming in to push it down farther. But, even after they push it down, well, these shorts have to cover at some point in time. So, and then, of course, after they cover, regardless if it's going to be bullish or bearish, there's going to be some period of, sidewaysness. Because we're getting back to equilibrium. Bulls were winning today, shorts won, and then we go sideways for a few, and who knows, maybe we go up from this, this consolidation, this pennant, or we just go down. Who knows? But the point is, I should have held to my, conviction, even though I couldn't short this stock if it went against me as a hedge against my, my puts. Still, I should have just held on to it and allowed it to play out. So, I'm never going to let that happen to me again. All right, next trade is Yelp. This one, I got in, the 27th is, Thursday. Got in on Thursday, got out on Friday. And I took 4 cents from it. Really, I made a profit of $2, but that's kind of irrelevant. Okay, so it was 75 put that I wrote at 152. So let me just move this, change this to Yelp. Let me take this to a 1-day 5-minute, and this is why I took the entry. I did a trend line and connected from here to here and to here. And once it broke over, right here, that's when I got in. Now I didn't, I didn't, sell on the bid. Rather, I sort of, sat between the bid and the ask, because I knew that after this huge green candle here, which is how much? It's about 84 cents. I knew that after a run like this, it's got to pull back, right? You don't want to chase it. It could keep going, but it's got to come back at some point in time, because it's after this run, it's getting a little bit exhausted here, so it's got to take a little break before it heads back up, and that's why I got in at 152 instead of slapping the bid. So I got at 152, and it's sort of kind of headed downwards a little bit. I was kind of getting worried, but yeah, we'll see what happens the next day, right? So what does happen the next day? It opens a little gap up, and so I'm kind of happy that it's at $79 around here, and of course it tanks. I shouldn't say tanks, but it dips a little bit, and so I'm still holding on to my position. Keep in mind I wrote the 75 put, so there's just plenty of space. Well, not a lot, but there's just a little bit of wiggle room. So it goes back up, and that's when I sell, because I'm not sure why. I think I was just having a bad feeling about it. And, eventually it just dipped. Now it crashes. And so, if I had the ability to write naked calls, I would. I would have wrote a naked call under the break of 77 right here, because it tapped it once, tapped it twice, and 3 times, and of course a little bit sideways, and then it really falls. So, this, if you look at the daily chart, one thing I've said in the past is I always wait for confirmation. I don't anticipate. And I'm in my previous trades, I'm really picky about what I take because I want to be sure that there's some moving average below somewhere. I mean, it's true that the 200-day is right here, but it's at $65, and that is just way too far out of the money for writing these puts. So, if the maybe if the 50-day, which is the green one, the teal one, we're at 74, 75, I'd have a bit more conviction, because then whenever I would write the put at 75, I'd have a moving average to help support my position, and of course it's a whole number, and this looks like previous support resistance that's now support as well. So, I think the biggest thing was that there just wasn't as much as of a wiggling room as much as I would want. I think so. Let me look. So I entered at, what was it? Maybe 79. Okay, so I entered at 79, and the strike was at 75. So it was just about 5.3% below. It could fall 5.3% and then be at 75, be at my strike. And normally I like to give, maybe at least 8 to 12% of wiggle room. So that was one of the reasons why I decided to cover my put. And it turns out it was the right decision. So remember, I bought in at, and this was the April put, by the way. I bought in at 152, and now it's 1.7 by 1.9. So if I could have changed anything, well, just the lesson here would be to have a moving average below, to act as a cushion, act as insurance. And I think that's it. I guess one other example would be, what I mean by cushioning would be, let's just say for today, if I decided to write a put for next week, well, I see that the 10 SMA is at 6.5, and the candle support is at maybe 6.2. So then in this case, I'd probably take write a put for 6, because there are walls above my position that have to be broken in order for me to really start worrying. So yeah. So that is reassessment video number 7. Please feel free to leave any comments or send me an email from the website. Thank you for watching.